Welcome to XYPN Radio, where your host Alan Moore brings you into a community of fee-only financial planners who want to profitably and successfully serve Gen X and Gen Y clients. If you're ready to get the knowledge you need from leaders in your field, learn from forward-thinking advisors, and take action on your own goals, XYPN Radio is the show for you. Here's your host.
Hello, everyone. Welcome to episode 5 of XYPN Radio's launch week. This has been a really fun week so far. We have featured Michael Kitces, Carl Richards, Sophia Berra, and Jeff Rose already, with a couple more interviews coming up with Eric Roberge and Jake Keebler. You're definitely going to want to tune in for those. Today's guest is Mark Maurer, and he's actually the CEO of Low Load Insurance Services. Now, insurance is a really tricky issue for financial planners, particularly fee-only advisors. And Low Load Insurance Services is actually founded to help fee-only advisors help their clients with insurance transactions. In addition to the issues that fee-only advisors face with not being able to just simply transact insurance on behalf of their clients, there's also the aspect of expertise. Mark kind of goes into that in this interview, that it really is impossible for a single advisor or even a single insurance agent to keep up with all the different insurance companies and products that are out there. And so you end up pretty much only becoming an expert in a single company's products, which is not ideal for our clients. So Mark will walk us through kind of their process that they use to work with advisors to ensure clients get the best service possible and that the advisors are actually looped in on every step of the process. And also be sure to listen all the way to the end of this interview, because Mark at the end talks a little bit about having bought Low Load Insurance Services from his parents, who actually founded the firm a couple decades ago, actually. And I think there are some really valuable lessons that will apply to those of you that are actually thinking about buying a firm from a family member. All right, without further ado, let's kick off the interview with Mark Maurer. All right, XYPN Radio listeners, thank you so much for joining us. I am here with Mark Maurer, the president and CEO of Low Load Insurance Services. Mark, thank you so much for joining us today.
Thanks, Alan, for having me.
So, because listeners may not quite know what Low Load Insurance Services is, or LLIS as we will probably call it throughout this episode, give us just a quick overview of what your company does.
Sure. For the last almost 17 years, we've been working exclusively with fee-only financial advisors to help them and their clients with insurance questions. The firm was actually started by Judith Maurer, who I call Mom when we're not in the office, and she was working with fee-only advisors only with permanent life insurance policies, like universal life. And over the course of time, there were synergies. Fee-only advisors knew how to charge fees, knew their clients needed insurance, but didn't want to do can't do the acts of an agent and get the commissions and all of that. So over the course of time, we had advisors ask us for, it was just the universal life policies, and they asked us, can you add term? We'd like you all to offer term. We said there aren't any no-load or low-load term policies out there. And the response back was, we need somebody who we can refer that to, who works with us, works as part of our office rather than as someone who may come in and try to take the clients or offer them other things that we aren't recommending. So over the course of years, we had the permanent life insurance, added the term insurance. In 2003, I came on board and was tasked with adding disability insurance and long-term care insurance to what we offer fee-only advisors. And we've also added annuities as an arrow in our quiver.
So pretty much everything short of P&C, is that fair?
What we don't do are health insurance and property and casualty. Where everything else is relatively similar across all states, those are very state specific. Health insurance, all of that, the whole, every state has their own exchange. Here in Tampa, we need flood and hurricane insurance. I don't know the first thing about earthquake insurance.
That makes sense. So when it comes to being fee only, maybe we can talk a little bit about some of the laws that exist, because advisors ask me all the time, why can't I as a fee only advisor transact insurance? And my understanding is basically the insurance companies have kind of blocked the ability to not accept a commission. Is that accurate, that you have to take a commission if you're transacting insurance?
It might not be that is the reason. It may just be that systems are set up that way.
So I can't blame the insurance lobbies is what you're saying.
No, I don't think so. It's the whole insurance system is based on an agency system where the insurance company really doesn't have anybody at the home office. You don't call MetLife and somebody at a MetLife desk at the home office helps you with the policy. If you call the 1-800-MetLife number, they're going to send you an agent in your area. So their systems are just built that in order to conduct business and transact business, the agent is the one who has the authority to sign for the insurance company and works with the client. So it's not necessarily, I think, that there's anything shady back there. It's just that the insurance agency system has been around for decades, if not probably hundreds of years by this point. And so that system is just set up there.
Just not conducive. I was talking to an advisor in New Zealand recently, and he said, well, I sell insurance, but I can just, turn off the commissions. I can just move my slider down. And I started to inquire, figure out what he was saying. And he basically has a slider when he goes to run a quote that has 100% and then every 10% down to 0. And he can just turn the slider to 0. He doesn't get a commission, and it reduces the premium to the client, which is not something we can do here. Is that accurate?
For most policies, that's correct. Now, with the no-load or low-load policies, we've essentially been able to work with home offices and do that to say, you have your normal policy A that pays X% commission. If we take that slider, that's a great example, we want you to slide it down as low as possible and still make the policy feasible for everybody. And so that's where we get a no-load or a low-load policy, that it's still insurance, but for X premium dollars, you'll get 15% more death benefit because we've done that slider to reduce the compensation as much as it can.
So basically, as a fee-only advisor, we can give advice on insurance, and that sometimes is state specific. I know when I was in Wisconsin, we were supposed to be insurance licensed in order to even talk about insurance with our clients. But ultimately, we can't transact insurance because of all the issues that you're talking about, which is why we either have to work with an insurance brokerage firm like yours, or we have to basically sick agents on our clients, which I wouldn't do to my worst enemy. So, because if they go out and they shop local insurance, and we still have to do this with PNC, which is really sad, but they call 4, 5, 6 different companies, and then all of a sudden you're on their radar and you're getting pinged all the time. So it's one of the nice things I think about working with a broker is that you get all the emails and our clients don't. But so you mentioned some low load and no load policies. I feel like there's just not very many of those. Are there a lot of options out there, or are we pretty limited on kind of, I guess, non-standard commission policies?
Unfortunately, until things probably change very significantly in the industry, it's not the big premium dollars to insurance companies. If you think of the fee-only world compared to the brokerage world, and I say, I have a great idea for a policy, and the only people who are going to recommend it are fee-only people, or the people who are going to recommend it are all the Merrill Lynch, Edward Jones, everybody else people. To an insurance company, which one looks more attractive? Well, I think the fee-only world is probably as big as maybe
a single. It's tiny.
Yeah. Maybe Merrill Lynch in one state. So it's just an insurance company wants to find things that are, a good business, which we believe ours is, but then also at the same time they're looking for, if we design something, there has to be some sort of return on it. And so we've been able to work with companies who either we've known people or have similar policies to say, you're halfway here. Some companies do allow on universal life policies that sort of slider. In the U.S., we call it blending it with a term rider.
Fancy.
I know. I like the slider. I'm going to start using that. Where I can say, okay, for $1 million policy, you get paid commission on the $1 million policy. I could blend it $200,000 of term rider and $800,000 permanent, and I really don't get paid much on the 20%. So some companies have sort of that slider, and then once we've worked with them, we'll use the slider policy all the way down as much as possible, and then if it's a good policy, we'll go to them and say, okay, we want a policy that's a slider even more than what your slider of what anybody else can do.
Gotcha.
So sometimes it's having those companies who get that idea to begin with.
Yeah, I mean, because none of the big boys that, in this space have really rolled out, I don't know, like flat fee pricing or anything like that. I mean, we see this on the investment side in the brokerage world where there are a lot of companies that don't allow their investment advisors to charge a flat fee or an hourly fee or anything like that. I mean, is there any movement in the insurance world to allow flat fee pricing of some kind or hourly or anything like that? Or is it, just so stuck on commissions, just like the investment world, we're just kind of going to have to live with it for a while?
Here's the one time where the insurance lobby might have a hand in this. For the most part, insurance is not necessarily the most transparent of transactions, which is why there are so many fee-only advisors out there. They understand that from the mutual fund side with all of the wrap fees and the other expenses. Forgive me for not knowing exactly what they are, but the 12B1 fees and
sure, and expense like ratios that. And yeah.
Mm-hmm. With the insurance, most people see the premium that they have to pay and the coverage. They aren't asking, what do you get paid out of that? And I think with some of the regulations that are starting to come out, we may see some things that somewhere in the illustration, it does maybe give sort of a calculation.
Oh, nice.
I think that's, I don't have a whole lot of hope for that anytime soon. But when we see something like that, then we may see some companies who, rather than a lot of upfront commissions and expenses of the policy, may go to something like a more levelized, spreading out the compensation over 5 years or 10 years.
And it'll probably be 10 times as much as the commission they would have earned on the front end.
Right. Even a little bit more, but then we're sort of playing an illustration game. Oh, well, this one pays less than that other one, so it must work better. Well, but it pays less over longer years. And
so this is a great question because clients ask me all the time. I had a client once that got into a really, really bad rising premium disability policy. And when we looked at it, I had actually run a quote to say this is what a level premium would cost, and it wasn't much more than where the current premium was, with that rising premium going way up over the next 30 years because it was a physician client. So, and he just looked at it and he was mad. He was mad that he had gotten sold this policy. So he demanded, how much did this agent get paid? And I was like, I actually don't know. So are there standard, a standard response or kind of a standard range of, let's say, term life insurance, disability, and maybe like a whole life or universal life policy on what these folks actually get paid for transacting? And I guess what you get paid, and we'll talk more about actually how y'all get paid, but what are the ranges?
Ooh, it's sort of all over the board, but I would say on a very, very, very ballpark number, on a disability or long-term care policy, 40 to 50% of the first year premium, and then maybe 2 to 5% as a trail on the premiums paid every year thereafter. Term, that can be all the way from maybe 50% all the way up to maybe 80 or 90% of that first year premium. But then most term doesn't have any trails or renewals or anything there. So that's why many times, and I'm sure, Alan, you've had it where clients bought a term policy, had it for a couple of years, and then all of a sudden somebody comes knocking and says, you know what, it's a great time to convert some of that term to whole life.
Oh, yeah.
And it's because the term usually pays sort of an upfront to the advisor or the insurance agent, and then there's nothing in it for them to keep it. And so it sort of, incentivizes the agent to every 2 or 3 years look back at their clients and who did I sell term? Well, they were young, they were term. I wonder if I can convert some of that term to a $50,000 whole life policy.
In the investment world, we call that churning. So it's basically churning insurance policies.
Depending. Yeah.
Fair enough. Okay, so term is big money, maybe not big money because the premiums aren't always that high, but the money comes in the first year. What about like a whole life or universal life, variable life, those types of policies?
Those are even harder. Those, I would imagine, 30 to 50%, maybe 60% of the first year. And then depending on the type of contract, there may be some trail on the amount of cash values in the policy or premiums paid the next year. Because there's so many different types of permanent policies, your whole life, variable, UL, it just depends on the contracts and the policies on what the compensation is on those.
Is there a way to find that information out if the agent just won't tell you? I mean, can you call the company or can you look in the contract, or that information is really just not out there right now?
It won't be in the policy. It will be in the contract that the agent has with the home office. I think the first thing is that if you ask and somebody won't tell you, that's your first red flag to go somewhere else. If somebody really, really, really wants to know, there are probably people you can call to find out, or at least give an estimate.
Sure. And so I got my personal insurance, my life insurance, whenever I had my baby through you guys with low load. And so one of the things that I remember asking was, how much do you get paid on this? Because I was curious. And my understanding from that experience was that y'all do tell folks, if they ask, exactly what the commission rates are on each of the policies that you've run quotes for.
Yep, absolutely. As I tell people, I don't really know. I can always find out, but it's not something that I have on the top of my head. It's not it's always 50% of everything where you could do it. I end up having to go to our file drawer over there and look up American General or Columbus Life, and it has a grid that says for 20-year term policies, it's this. For 10-year term policies, it's that. So we're happy to do it every time. As you said, I have a job. I have kids who I need to put through college and all that. It'd be nice if I could do this for free, but our firm is compensated, but I am happy to disclose whatever it is if anybody ever asks.
So, let's get into the compensation conversation, because I think this is another area where low load is really unique. And apparently you have like 8 different company names, because I've called you Low Load Insurance Services, Low Load, LLIS.
I've seen Low Life one time, and I wasn't a big fan of that one. I did have a trucker who was hauling something Florida to Alabama, and he called us and he said, well, it's a pretty low load. So, what would it cost to insure that for this trip? And I had to explain it's not really what we do.
Well, so let's talk about the name, and then we'll jump into compensation, because people do ask me sometimes whenever if I ever mention low load insurance services, they say like, oh, so their commission rates are lower? Like that you kind of alluded earlier to where the name came from, but just tell us what's in the name. Where did that come from?
Sure. Again, starting in, let's say, 1999, the only types of policies we offered were low load universal life contracts. So they had no surrender charges, high immediate cash values, and that was the only thing that we offered. And so the compensation to us as a firm, usually called a marketing allowance rather than a commission because it's accounted for differently, is much lower than any other commissioned permanent policies. So when it is a low load policy designed for us, it has a lower commission than the similar policy that insurance company might offer that's a full commission policy. Then outside of that, advisors asked us to offer term, disability, long-term care. We said there aren't any no-load policies out there. They said, that's okay. Our clients need disability insurance. So, the policies we like are highly rated companies. They are, my doctor clients might need a Guardian DI policy. I can either get it from the guy down the street, this guy over here, or get it through you all. Because any of those policies, the premium rates are filed in the state. So, a Guardian DI policy, all things being equal, it's going to be the same wherever it comes through.
Gotcha.
But it's the service and working with advisors and understanding that your clients are your clients. We're just there to help, not, hey, this might be a potential new client for me, and we're going to talk about other things.
So that answers the question. So it's kind of an old school. I mean, it just came from a different time period in terms of kind of where your company was focused.
Mm-hmm. Right. Yeah. And we still offer the low load policies, which is still something that I've had some conversations with advisors, and we're showing something with the client, and there's another agent out there, and the other agent will say, no, I don't know what they're talking about. That policy does not exist. I don't know. And I politely say, well, they need to call the home office, and yes, it is a policy. It's the same thing. It's just not available through those channels because it's designed for us to offer to fee-only advisors. It's not designed for commissioned agents to either pick or choose what they want to do. This client is a good client. I, want to get the better policy. This client's not such a good client. I want all the commission. It's
charge
almost
them as much, yeah.
Right. Yeah. What am I going to do? Here's the only one we're going to do.
That's really interesting.
As compared to be able to switch back and forth.
Okay. That makes sense. So we've established that fee-only advisors can't transact insurance because we have to earn a commission, which means LLIS, when you transact, you earn a commission. So, when I call, obviously you have a pretty big team, and so end up talking to some of the different specialists in disability or long-term care or life insurance, that sort of thing. Are they earning the commission? How does the money flow with LLIS?
That's a great question. The money flows directly to LLIS. So no one is compensated directly by the insurance company. We're all salaried employees here. And then, like I hope everybody listening, at some point you'll have a salary and you'll have a good year, and then you may have a bonus or something like that. So, but no, Jerry Skapiak here is somebody in our office, and he'll be with me at the XYPN conference later this year. He helps with annuities, he helps with life insurance, he helps with long-term care, but Jerry isn't paid based on the number of policies he brings in or anything like that. So the compensation is paid directly to LLIS, and then we're all salaried employees of LLIS.
Okay, so LLIS gets the commission, kind of goes into the, that's the gross revenue of the company, and then you're hiring insurance specialists in their kind of different areas. And obviously, to your point, if there's a really good year, there's going to be bonuses and things like that, but they're not directly incentivized to sell product A over product B or anything like that.
Absolutely. Like I said, I don't really know what it is on any given policy, and I'm the one who has the contract. So most people really, really don't know. Our goal is I always say my goal is to win. And, I want to find the best policy out there for clients. And, we do that pretty much regardless. I've never made a recommendation based, a term policy based on the fact that we might get more commission on one than the other. It's
right.
I want to win every time. And
the win being the client getting the best policy for them and actually buying it and not just kind of letting the ball drop and not getting insurance because they maybe don't trust the recommendation.
Exactly. If I tried to run it on, which term company pays us the highest premium, and clients are finding lower term rates for the same coverage out on insure.com and all of that, pretty soon my phone isn't ringing. And so I want to make sure that I beat or win anything that's out there.
We will bleep out that website. No, I'm
not even sure if that's a real one.
I've never even heard of it. So
it may or may not be a real one. My dad always used Buffalo's Breath of Wyoming Mutual as his hypothetical insurance company. So.
And a lot of people would probably buy it probably believed it's true because being in Montana, we get a lot of those questions like, oh yeah, they come into Yellowstone and they want to know like, oh, when do you put the animals up at night? It's like, it's not a zoo. They live here. They roam. So I'm sure people would buy that. So Buffalo Breath of Wyoming Mutual.
Mm-hmm.
We should start a company called that. I mean, there's got to be a marketplace.
It doesn't sound like it has to be all that large.
So, and if listeners haven't clued in to or haven't kind of noticed the fact that I know a little bit about LLIS simply because I've been using you guys for years. And one of the things that I've always found really helpful is the analysis side. So if I have to admit, whenever I got back my grid from the CFP board that showed, whenever you pass the CFP exam, you have these 7 different areas and they show basically a competency line. And they say you did mediocre here, really good here, really poor here. And my one that was way under the competency line was insurance, which was kind of sad, but that's okay. So I've never been an insurance agent, never done analysis beyond just, kind of what we learned through the CFP board. And so what services do you offer folks like me that just don't have the insurance knowledge or the energy or the time to really dig in? So if we have a weird whole life policy come in and we're trying to figure out when it blows up or something like that, I mean, what do you guys do there?
Sure. In that perfect world, you'd call me and say, Mark, I've got this client with this whole life policy. I'd say, Alan, that's great. If you can forward me the most recent annual statement and get me some information about the client, then we can do a lot of work on that. We need the health information because if the client just had a heart attack last week you can't do much with the current policy, and it probably is the best thing that they have right now, so you want to hold on to it. But let's assume health isn't that big of an issue. With the current annual statement, an in-force illustration is even better, but I don't ask for those very often. But most people should have an annual statement that they get and file away in the guest room dresser bottom drawer somewhere every year. And that tells us this policy was purchased in 1984, but as of this year, here's what it looks like. And then we can work with advisors to find out what are the goals of the policy. In 1984, they probably purchased the policy for a whole different reason than why they might have it today, or more than likely really what they need today. And so I'd say probably on any given day, half of my day is spent reviewing policies, talking to advisors about what good strategies might be. And so for that whole life policy, we may say, here are some options. They can stop paying premiums and it'll do this. We could look at putting the cash values in an annuity to defer, or to an immediate annuity to take income. They could move it to another type of life insurance policy, maybe that doesn't have any more premiums. Lots of different things that we can look at. Sometimes the answer is they can keep it, and if they just simply want to maybe change the dividend option or pay a little bit higher premium, keep the existing policy. So a lot of it is working with the advisor, because an insurance policy isn't good or bad by itself. But what is the client's needs, wants, desires? What do they need it for today? They've had it for 20 years, probably for a completely different reason. And 20 years from now, the policies I bought to protect my family when I have little kids, I'm hoping in 20 years that they'll be out of the house, and I'm not paying for them anymore. So they were, good policies then when I, took them out, but will I need them in the future? Well, things can always change, but it's that sort of analysis that we're working with the advisors on to say, what is the need for insurance today? And sometimes it's none. And so then, okay, how do we blow this policy up? Is it in a big gain situation? Is it not? So lots of different options, but usually what I'll have advisors send me something, say, hey, Mark, take a look at this policy. Let me know what you think. Almost every time I need to go back for a little bit more information. Tell me what you think they should have, or what you'd like them to have, or better yet, I say, if we didn't have this policy, what would you recommend for insurance? And then we can move forward with that, and then getting that health information to say, and then what can we do, if anything, as far as insurance goes.
Makes sense. And I liken working with LLIS as kind of how I work with TAMPs for investment management, in that, working with you guys is kind of like having an insurance expert on staff, but you have like 16 insurance experts, don't you?
By now, yes. And a new IT guy. So he's not an insurance expert yet, but he's already an IT expert. So
he will be soon.
We'll get him there soon. But yes, it's, and I'm still amazed how, even today, a one-person office, or maybe a one agent and one admin person could really keep track of all the changes in life insurance, disability insurance, annuities, long-term care. It's sort of always changing, and so we have people who work. Jerry Skapiak, he's another good person. He used to work at an annuity insurance company, so he's our sort of go-to annuity person. We have people who work on disability more than annuities, or a long-term care specialist. All those are always moving. So to have a one person who's able to work in multiple states, who's keeping on top of all the different options, I don't know how somebody could do it. So I think what ends up happening is, if you're that one person, or two people, you end up being just I know a insurance company really well. So we're always kind of going to recommend insurance company A, and maybe I know insurance company B a little bit, just because if I have problems getting a policy with A, I can go to B.
That makes sense.
So one X company's everything they offer really well.
Because it is a lot. I mean, we look at advisors that are trying to start serving younger clients, which is, the majority of our listeners. And, suddenly they're in this position of having to be an expert on student loans and Social Security analysis. And just that spread is enough, much less you start throwing in trying to keep up with all of the different insurance companies that are out there and all the changes that are happening. That is, I can imagine that would be just a daunting task. I bet your folks that specialize in disability insurance have a tough time keeping up with all the changes in that world.
Oh, absolutely. And long-term care is always changing, and even life insurance and annuities. The indexed annuities didn't exist 10 years ago. These guaranteed lifetime withdrawal benefit riders, and these things are relatively new. So it's always changing. And so, as you sort of alluded to, trying to be a fee-only advisor who, especially starting, maybe starting out or still relatively new, trying to meet clients, get clients, do the planning, probably doing some of the investment, and then trying to understand all these different insurance things, I don't know that it's feasible with anybody's, time. It'd be sort of like me trying to, or the same advisor saying, okay, my clients need wills, so I need to read through everybody's will and sort of create my own template of what I think their will should look like. No, that's why you identify the need as, wow, you guys don't have wills and you have 3 young kids. We need to get you to an attorney who's going to take care of that for you. Here's 3 people in town I've worked with, and so that's sort of, like us. The second step is maybe, as the financial advisor, I always call the financial advisor the general. You may know something more specific than this attorney is going to, so you may need to say, talk to them because you own that family limited partnership with your other 2 siblings of the, 400 acres in Montana. That's sort of a separate thing, so make sure that we talk about that.
Sure.
Again, sort of the same with us. It's, you need life insurance, call these people. Well, we usually end up with, Money Guide Pro is showing that you have a shortfall of about $1 million. Your kids are 5, 6, and 7, so we probably need it for 15 or 20 years. Let's get quotes on both of those.
I think that's a really good point because as financial advisors that do comprehensive planning, we really are master generalists. And I've always told clients my goal is to be able to answer 90% of the questions that come to me and handle 90% of what they need. But ultimately, we do have to have specialists. I mean, you have to have a JD, got to be an attorney to write a will. I mean, I cannot get them a will. I cannot transact insurance. There are things I simply can't do. And so I guess maybe it's helpful talk through how advisors can expect to interact with low load, because I think, if I go out and I recommend a company that shall not be named, down the road that has an agent and I say, yeah, just go talk to this agent and the client's going to go, I'm not going to have any idea what's going on. When an advisor sends a client to you, can they stay in the loop or are they sending their client to kind of a black box?
No, no, just no, period. But let me elaborate. As you said, as I mentioned, the general is sort of driving this. And so because you're the advisor, or everyone listening is the advisor, you know the client pretty well. And so usually what happens is that first introduction somehow is either email, phone, or at least, we don't often get a lot of, hi, Mark, I need life insurance. Alan said to give you a call. All right, well, did you talk with Alan about how much you need and what types? No, he just said give you a call. I think most advisors like and should have a little bit better idea of what I think Money Guide Pro, not having ever used it, I just know it, in passing that there's needs calculations and things like that. So most of the time, you've already talked with the client, you've said, here's this kind of shortfall, you have a general idea, and then, they get to us because here's what I think the need is. Now we need to price it and figure out how to do it. So I'd say usually there's that first step that says, Mark, here's what we're looking at. We have some advisors who've worked with us for a number of years who send their clients to our website. Mr. Smith, I've worked with Mark and LLIS for a number of years. I'm showing you have a shortfall of about $500,000. I think it should be 20-year term. You can go to their term quote on their website, put that in, they'll send us quotes. And when I say us, when the client comes in to the website, to our phone calls, whatever it might be, we keep the advisors in the loop. So you're kept up to date on the quotes, how applications aren't progressing. So there aren't any surprises. No advisor ever will send a client to us for a term policy, and then they walk away with 2 whole life policies and 4 annuities.
That would be really disappointing.
It would, but there's a reason that we have new advisors calling us regularly, is because things maybe not quite that bad, but that, as you said, sometimes if I refer to somebody else, I don't know what's going on, and then all of a sudden maybe you get a phone call 3 months later and say, Alan, I don't know what's going on. I haven't heard anything. Our system is designed to keep the advisor in the loop so that you do know what's going on, because it, back to that, it is your client, not our client. It's your client. You're the general. We're helping, and so you're watching it again like a general. You're watching it sort of from afar. Okay, if anything starts going off course, or we'll end up calling the advisor. Hi, Alan. We've tried calling them 3 or 4 times. We can't get a hold of anybody. Do you know anything? And then you'll say, oh, I forgot to tell you all they're having a new baby, or they went to Dubai for 3 weeks. They'll be back in touch next week.
I think that's the big thing, because we maintain the relationship with the client. So really your client is the advisor. And
Absolutely.
I mean, you're helping us with our clients, but ultimately the advisor is your client. And from my experience, the only thing that I really couldn't get information on was something that had to do with a medical condition. And obviously with HIPAA, you can't violate that just because I'm the advisor. And so, it was basically hey, we can't really tell you, you got to call your client. And so I called the client, and they were happy to tell me, what was going on and could loop me in. But I think that was the only question I ever asked that couldn't be answered. Everything else of, hey, have you gotten their medical records, where we had an underwriting? Have they paid their premiums? All of that I was able to stay in the loop on. So I was able to, I've always been able to keep up with where the client is in the process.
Right, exactly. And that's the goal. We do get those every once in a while where, this was a surprise. Nobody mentioned this, that, or the other. And you're absolutely right. For health, privacy, HIPAA, all those other reasons, there are going to be certain things that we aren't at liberty to divulge. However, if you call the client, they know, and then we could always reconnoiter back with a phone call or something, a phone conference to go over it. Because as long as the client says, oh yeah, let's get on a 3-way call and I'm going to have Alan there, then the client's giving us the permission to discuss it. Obviously,
Makes
you're on
sense.
the phone. It's that first initial that is hard. And and I've used the phrase, I'm trying to be as vaguely specific as possible. I can't tell you what it is. However,
can tell you that it's something that we have to, integrate into the plan. And it may be something that they didn't know about. I mean, I had a client that had something turn up in a underwriting process that, during blood work and that sort of thing that, had to go back, and it gets integrated into the plan.
Right.
And I do think this is an area too that I've always been interested in terms of the benefit, because we talk about, being an expert in everything. I had a client once come in and he had been diagnosed with Crohn's disease and had been denied from pretty much every insurance company that he could find. And so we were able, when we started that process, just to immediately say, hey, this is something that he's dealing with. So it doesn't come up in underwriting, because that's going to get known pretty quickly.
Right.
But y'all knew the one company or the couple of companies that was worth running a quote for. And it's not usually the companies that I saw, pop up on quotes. Because they were the ones that were okay with him having Crohn's, and as long as he was, X amount of time away from a flare up, and I think it was higher premiums in the first 2 years and then lower. Like, it was a really unique situation. But that's something that if you haven't dealt with a client that has Crohn's disease, you wouldn't know who to call or how to deal with it. And that was actually a really efficient process.
Well, and Crohn's is one that I've gotten used to. Every once in a while, I'll still be surprised by things that come up, and I go, I've never heard of that. But and this is the benefit to us being independent, so that we can work with lots of different insurance companies to, we do a lot of pre-underwriting. I remember your client, and so that's a perfect example. When someone doesn't do a good job of underwriting and you apply to an insurance company and they see, let's use a history of Crohn's, that might be a company that just says, you know what, we don't do that. So you end up with a decline. And it's not a great way to do things because now nobody's happy. So what we did is we got all the information as much as we could get, without the full medical records, but when was the last time you had this? What medications are you on? How many flares have you had? When was the last one? And then we can send that to home office underwriters anonymously. Here's a male age 35 looking for $1 million of 30-year term. But then here's the very, specific things, because the dose of medication is important and how often they take it is important. And so we can send that to 5 or 6 underwriters or 10 or 15 to say, here's all the information. Will you consider an application? And assuming nothing is significantly different than this, which sometimes it is, what would you offer? And so we cut out we've already done that first glance to say, okay, these 3 companies said, nope, we wouldn't even offer. And like you mentioned, those might be the ones who show up on the whatever else is out there, but it's just not what they do. Each insurance company is going to have its own sweet spot, what sort of risks they will accept, what sort of premiums they'll charge. So, we do quite a bit of work before we ever send an application to a home office. Sometimes people may not like the estimates that we're showing initially, but for the most part, I think they're accurate. And so there's I think a lot of times people come back, oh, this other person was showing me preferred. They can't get it, but then what that person is choosing to do is get the application, get it in underwriting, have it come back, and then you sell it on the back end.
Right.
So you sell that,
You sell the fact that you have a lower premium on the front end and then knowing it's going to go up.
Right. And then you say, oh, well, we have an offer. You probably can't get an offer anywhere else, which usually isn't true. You've already done, but what people do have sometimes is, underwriting fatigue. I don't want to start over. I don't, want to do all of this again, new application. So I'm just going to take this policy that was shown to me the first time, even though it's not what the guy said it was going to be, just because I want to be done with it. And maybe it's, $500,000 instead of $1 million. But that's a business philosophy that we do quite a bit of underwriting. I've got 3 or 4 on my desk right now where I've sent information to home office underwriters waiting for responses before we go back with our final quotes. We usually get the quotes from the website, which ask 20, 25 questions, sort of the big picture things. Then once somebody says they'd like to move forward, then we do the more formal application interview, which is 10 to 12 pages. And then once we get all that, then we take that. If I see any issues, concerns, questions, then I'm sending that to underwriters to say, I have a client age 52 with, what does this guy have? MGUS, which is something I'd never heard of before. See, there's an example of something I've never heard of before.
Right.
I had no idea what it's going to do to disability underwriting, but we got all that information that wasn't on the website, quote, initially. And so we have now this second part where, okay, we're going to re-underwrite it again, rather than just assuming from the beginning, that the 15 or 20 questions are all good. We're going that second part to say, okay, now that we have more information, what can we realistically expect? Because nobody likes surprises.
Because everyone wants to be super preferred, but we are not all so fortunate as to be in that boat, especially as we get a little older. So
I'm not even super preferred anymore. And so, I've told people if I can't get a home office to ignore a little something on me and give me super preferred, I don't know what else I can do. Some people have pretty big issues out there.
You bring up a really good point with, underwriting fatigue, because ultimately I think either people purchase a bad policy or they don't get a policy and they need it. They need life insurance, they need disability, and you just get so tired of getting a ton of quotes and going through the process and getting denied and then trying to get letters from your doctor and all of that. With using a firm like yours, you can kind of do that once, and you go through that application once, and then you've got all the information instead of having to change agents and bounce around and give them all the same information over and over, because they've all got different standards for how they want the information. So you can't, it's not like a single application you can send 10 different people.
Oh, that would be great, but of course not.
Nothing's standardized in the insurance world. I think I
would love a federal insurance license, but as of right now, I think I have 50 state licenses that I have to renew every year, every other year.
Do you have continuing ed in all 50 states? Like continuing ed
Luckily,
requirements?
in some states that have specific training, some states have specific annuity training, some states have specific long-term care training. But for the most part, since Florida is a pretty normal state, anybody who's ever watched Jon Stewart or the news in Florida knows it may not be exactly normal. But for the most part, the fact that I'm licensed here, most states give pretty good reciprocity for non-resident agents, except for some of those things where New York has as its very specific partnership program for long-term care. And so I have to take their continuing ed every, I think, 2 or 3 years for them, but I don't have to do New York's life insurance stuff every year. My Florida license, luckily, works for all the other states.
You could probably write a book on getting licensed in all 50 states, because aren't there some states, is it New York, that requires like a local address or something? Like every state has their own little funky pieces.
Hawaii had one a number of years ago where you did have to have a local address. And the nice thing about internet and things like that have overcome that. But the New York long-term care partnership one, you have to take in the state of New York. And so I flew up. It was a rough trip. Both my flight in and my flight out were delayed for weather. And so I was in D.C. and the flight, you know how you've been to the airport and you see the weather and they don't tell you your flight is canceled, but on the board, it's just like starting to tick down, canceled, canceled. And they're not telling you yet, hey, yours is going to be canceled. Oh, it's still on the way. It's still on the way. And as you're watching them click down canceled. And so I got over to Hertz. I said, I need to rent a car because I'm not doing this again. Drove through the middle of the night. This was before I had an iPhone. So I'm calling my wife every hour or so to say, okay, I can go left or right here. She's looking on the computer. She said, nope, go right. I said, okay, good. And,
those were the MapQuest days, man.
Yes.
Oh,
yes.
Remember when we had to print map directions? And did you print the turn by turn with the colored maps, or did you just print the directions? Because it was a lot of colored ink that we had back then.
You're right. I'm sure it was MapQuest. I got to this. Luckily, they were having the training in a hotel. So I got to my hotel about 3 o'clock in the morning, got up at 7, took the day and a half class. And, one of those moments where you go, I could go home and try to reschedule this. Nope, there's an option. It's not a great option, but I'm halfway there. Let's finish it.
Go ahead and go with it. So LLIS can transact all the different insurance policies we've talked about in all 50 states. Is that correct?
Correct.
Now, and I only ask this because some folks have started getting interested in XY Planning Network in other countries. Can you do anything in Canada or Mexico or anything else, or is it 50 states? Okay.
As of, I don't know what it would, just the 50 states.
Okay, that makes sense. Because
people who may be, residents or legal aliens or working here on different types of visas, as long as they're in one of the 50 states, they can usually get coverage. But
that makes sense. So as we're kind of wrapping up, because we're running up on our time, this has been such an awesome conversation. You are a very young business owner, and I don't think people necessarily realize just kind of your backstory, and maybe we'll have you on at another time to talk through, because you purchased the firm from your mom, or I guess from your parents, and so that entails a whole other set of skills that we probably have some listeners that are looking at buying firms from their parents and that sort of thing. But you run a very successful company, and do you mind if I ask your age?
No. I love that you call me very young. So I will be 40 at the end of this year.
Oh man, we're gonna have a party.
No, we don't.
Well, I'll be 30 soon, so we can have a party. And by soon, I mean like almost 2 years, but that's okay.
I will tell you what I think about that offline when I'm being recorded there, Alan.
We can bleep out anything you say at this point. So
it's more of a gesture than.
But, so one of the things is you can run a successful company you were basically a succession plan, kind of coming in and taking over from your parents. Can we just do kind of briefly chat about what that process looked like for you? Because like I said, I'm sure there are folks listening that may be in a similar position of looking at buying a company, even though it's maybe a financial advisory company, but looking at buying a company from their parents.
Yeah, the part I think that I had going for me was that I never really thought I would be doing this. I never thought I don't want to do it, but it wasn't like it's, the Mauer insurance agency where, everybody takes it over and we're, planning on having you come in, son. I worked in Atlanta for an international shipping company. I worked in Gainesville, Florida for a natural gas trading company. So I ended up working for a really large company where you see, sort of lots of bureaucracy, and I got moved twice depending on who my boss or my boss's boss was and where they sort of wanted their people. So by the second time, when they kept getting farther and farther from my apartment, I said, I'm not sure about this. In Gainesville, it was probably a 7,500 person company who I think by now they have 400 or 500 people, and so I learned great things from the people at both of those companies, different sizes, different styles. And then one day we were living in Gainesville, thinking about maybe moving either into Tampa. I'd actually come here and interviewed with TECO, Tampa Electric, for a position, and stayed here with my parents. And so we were thinking about either moving here to Tampa or Vero Beach, where my wife's family's from. And sort of had, on the flight to go, or on the drive to go back to Gainesville, Keith and Judith called and said, you know what, there might be a fit here. So they said, give it 3 years. Did 3 years, and then we started talking about the sort of the more detailed, the buy-sell, the succession planning. So I think what really helped me was that I never expected it, whether I think it's my right or that's what my career is going to be, being 25 and saying, okay, as soon as I get out of college, here's what I know I'm going to be doing for the next 40 years. I didn't know, so I got to see big companies, medium companies. I love the small company. So we've started the buyout process a few years ago. Luckily, we have friendly purchasers, so ours probably is extending time-wise a little longer than the average one. But that's definitely a tricky thing we actually do have a NAPA advisor who is helping us with a succession planning, who, is pretty able to balance. You almost need that person. It's probably hard with a young NAPA advisor, young advisor in a firm, and then an older, more established planner in the same firm to come to a table and say, I think it's worth this. I think it's worth that. I want to do this. Well, I want to do it that way. So we've, the family dynamics, having that third party who can say, okay, really, we sort of want to do what's best for both parties, not to the detriment of either one. And so that's been helpful from our standpoint, because I don't know how we would have done it or come up with it. And, it's almost been like here's sort of the recommendation. Does anybody have any problems with that? And so far, no, but it was sort of getting input from both sides. How do we do this? Then there were sort of conversations. Which one do you like better? Is this a problem?
Because there's a lot of ways to buy a firm, no matter what kind it is. And I think it's awesome that you didn't really know that it wasn't really your intention to buy the firm, despite the fact that obviously your parents owned it. So you grew up around it and kind of knew it was there, but kind of fell into it later on. So that's really interesting. I don't hear that very often from folks that ultimately ultimately end up being the family succession plan.
It's been a lot of fun. It's been great. That part, I think, has helped make it a good fit, because I didn't really see it coming. And I think sometimes if you feel like you don't have a choice, then maybe you do things differently or aren't as excited about it. And I got into it and thought, okay, let me see if I like this, because I like Tampa. And the dynamics are that I still eat lunch with my parents a couple of times a week when they're in the office, and so that's
fair enough.
We end up with seeing at birthday parties and my kids' birthday parties and trying not to talk work too much.
But we love what we do, so it's okay. Well, Mark, this has been an absolute pleasure. Kind of as we close out, last question that I like to ask everybody that we have on. If you could go back, and I guess in this framework will be as you were kind of evaluating whether or not you wanted to buy the company or do something different, if there was one piece of advice that you could go back and give yourself, something you wish you had known, anything, what do you think that would be?
Wish I had known. That's tricky. I think it's not necessarily I wish I'd known, but I think having worked here for a few years before there was any real talk of buying the practice was big. Maybe I can think of another one, but
no, that's probably huge for folks, because I know I was one that wanted to have that conversation immediately with firms that I worked at, and then ultimately was disappointed when it didn't work out. So, for our young listeners that are, kind of in that position, or they're taking a job that they hope to buy the firm, that, maybe give it a couple of years before you really sit down and have that discussion, because you don't know yet what you don't know. And it does take some time once you're there to really understand the process in the firm, and to see if it's going to be a really good fit.
I knew that that was on the table. And so maybe having that conversation that, is this something you're open to in the next 3 to 5 years? And then moving on, because when you buy a business, you're buying the people, you're buying the culture. For advisors, you're buying the clients. You might say, hey, this is a great planning firm, and they all have, X billions of assets. This looks perfect. And then you get there and you go, I don't like any of these clients. The person who owns the business loves them because they're all at the same, church or synagogue or golf, country club. But
sure.
I don't like any of them. And so you've sort of, started down a process and spending time and energy before you go, no, I don't really, this is, for right now, this is a job, but I don't see myself here long term. So sort of jumping the gun and I can imagine that you're older. Again, I'm 40, Alan, so older than me. A new person. The first couple weeks on a job, and then starting to ask about buy, sell, and how much equity I'm going to get. It probably works both ways. You don't know enough there, and then they're looking, going, you don't know enough here to really have that discussion. But is this something we can talk about in a few years? Are you open to that? Yes, no. It may help. Yeah, and let it go to see, I think sort of the best thing that I did here was that conversation with Judith, or said, give it 2 years or 3 years to see if you like it. Because if you don't, we'll find something else. But I never felt like I was locked in from, day one, and we're going to start this buyout process. That's a lot of pressure when you're just starting out. So that, I think that taking time to find out if it fits, do you like the people, if it's a multi-owner thing, do you like the other owners? So I've been to enough conferences where I think younger planners are talking about, how do I get equity in the business right away? You may not want it. So give it some time to say, can I see myself here in 5 or 10 years or 20?
So patience is key. I mean, because like you said, not only patience in the sense of kind of turning off the firm owner to the conversation, but also in the sense of being sure it's what you really want. Because once you buy in, it's a whole different level of long-term commitment than just being an employee.
An employee, I don't like this, I'm done in 2 weeks. If you've already bought 20% of it and you decide that, it's really hard to get, it's not like GE stock where you just cash it out on some exchange. It's a lot trickier.
Well, Mark, thank you again so much. This has been awesome. Thank you for taking the time to be on the show. Look forward to seeing you, as you mentioned, at the XYPN conference. Mark is going to be speaking on an insurance topic, as well as LLIS is the national sponsor of the conference and the CE track. So we are going to be able to hang out with Mark and his team. And I've said this on other shows during this launch week, which is a giant tease because we actually sold out for the XYPN conference. So if you don't already have a ticket, we'll have to have a bigger venue for next year. Thank you. So, and one more quick thing before we go. Every February, LLIS hosts an insurance academy down in Tampa, and it is awesome. I have not had a chance to go, but everyone tells me it is just an absolute great conference to go to learn about insurance, to get CE credit, and meet the low-load teams. So everyone can kind of mark that down. Do we have dates on 2016
Yes,
yet?
we do. And they are up on our website. If you go to the LLIS.com website, and go to the tab that says for advisors, there's a section that says education, and it's in there. I know I probably should have had that handy, but
no worries. I did not prep you for that. We'll put a link to the dates.
I got it, February 4th
and
5th.
4th and 5th. There we go. So definitely mark those dates down.
Riverwalk Hotel. It's right on the river, and Tampa's been doing a lot of rejuvenation of their river, and so it's going to be a nice place.
And what better time to be in Tampa than February?
I can't promise
February,
that it'll be warm, but I can promise it'll be warmer than where most people are coming from.
Especially for me.
All right,
well,
thanks,
Mark,
Alan.
thanks again. Oh, what an awesome interview with Mark. Insurance is just such a sticky topic for fee-only advisors. And so Mark, I think, does a really great job of breaking down how you can continue to help your clients with all of their insurance needs while remaining fee-only. You can check out all the resources that we mentioned today during the show at xyplanningnetwork.com/5. Now, before we go, I do want to thank Mark for his support and his team's support of Launch Week. They are the sponsor of our XYPN Radio Launch Week. And honestly, we couldn't have done it without them. You know, I've actually worked with Low Load personally for over 4 years now, and they are such an incredibly valuable member of the financial planning team because of exactly what we talked about in the interview. You know, fee-only advisors, we just can't transact insurance on behalf of our clients. And, you know, turning them over to a local insurance agent certainly isn't ideal. And so I have found that, you know, their areas of expertise and their really in-depth knowledge allows me to provide such a high level of service to my clients since they really do know the ins and outs of the insurance industry. If you want to learn more about Mark and his team, you can go to LLIS.com, or again, you can check out a link to the show notes at our website at xyplanningnetwork.com/5. Thanks so much. We'll see you next time.
You're not alone, and you're not crazy. It's scary starting, building, and growing your own financial planning firm. And that's why we put together a free private community just for you, the Cutting Edge Financial Planner. Go to xyplanningnetwork.com/VIP or text XYPN Radio to 33344 and join a network of thousands ready to change the lives of Gen X and Gen Y clients.